It's the end of week 3 of January 2024, and you've been excited to see the gentle slide down the interest rates have been taking for the past few weeks now. And then, like me, you woke up on Friday and said, I am super displeased to see that the rates on some of these mortgage products have actually bumped up 0.0125% here or there, and that was not what you expected. Now, maybe you want to buy your first home, or maybe you want to sell your place and retire to Arizona, or maybe you're just a real estate investor who is, your head's spinning and you're looking for signs of rate relief. Well, today we're going to talk about the 3 reasons why interest rates rose again in January, and what is it that we think is really going to happen with home prices in 2024. Plus, if you stick around to the end of the video, I will share with you the one element that we cannot control, but is, I think, going to play a really big part of real estate market in the early 2024 year. Hi, it's Nancy from Nancy Chu Homes, and thanks for joining us. Look, there is a lot of dry statistics happening in today's video. Please stick around. The data is super important, and it's how we make predictions on how the market's going to behave. So bear with me, I promise it's valuable info. But before we continue, please take a moment, pause the video, scroll down to the comments, and tell me what your real estate goal is for 2024. Whether you want to buy, sell, rent, invest, we want to hear about it. All right, so let's dive in. Following a quiet end of 2023, the first 2 weeks of January saw a bump in inventory with very intense multiple offers on especially the 2 coasts and, maybe not so much in the middle of the country, and especially in the Northeast. Now, we have less new construction due to our lack of developable empty land. So existing home sales, we're seeing like 5, 11, 17, 30 offers again on listings. Now, these are some great year-over-year stats, right? January 2024 saw 7% more listing inventory and 5% more homes in contract than we saw at the same time in January 2023. Now, this is good news, right? Because more inventory gives more choice to consumers. And hopefully, if the inventory continues to rise over time, it'll alleviate some of the home price issues and some of the affordability problems that we have, right? Buyers don't have to fight as hard if they have 10 houses to fight over instead of just 3. Law of supply and demand, right? Well, okay, so the Federal Reserve doesn't quite understand that sellers won't list their homes if the rates are too high, because why should they give up their own shelter if they're afraid that they can't either afford or even find another home to move to? So for a little bit, it felt like we were kind of on the right track, more inventory to disperse that demand, right? Well, sadly, interest rates took a hit this week, thus bringing us to the 3 reasons interest rates rose again the 3rd week of January. 3 reports came out that showed how strong the economy continues to be, which does not help with the fight against inflation. Report number 1, retail sales. They jumped in December, the holidays. With people loading up on cars and clothes and yummy food and just generally buying a lot of stuff and probably a lot of gifts, was not great news concerning demand for goods, right? Report number 2, the University of Michigan put out their survey of consumer sentiment, and a 14% increase in positive consumer vibes. Listen, this was across everybody, all ages, races, regions, education levels, income levels. Everyone. Everybody was feeling better about inflation and their personal finances, and also a general overall positive economic outlook. Although it is absolutely insane to me that when people feel positive about inflation, that freaks out the people in mortgage who gauge where rates should be due to, their definition of risk tolerance from over exuberance from these same consumers. It's like this. All right, never mind. Moving on. Number 3, the Bureau of Labor Statistics posted their jobless claims for the week. And for the first time in a long time, there was a huge discrepancy, a nearly 11% discrepancy between what the number of jobless claims were projected to be versus what they actually were. And we all know that the Federal Reserve has been working very hard to decrease employment as part of their fight against inflation. Once again, duh, holidays, wondering if folks found work due to seasonal hiring. So, of course, in response to these economic reports, the Federal Reserve started to backtrack and pull back on what they had promised in their messaging, supposed rate cuts. And now it looks like we're not going to see those March cuts, but likely, if we're lucky, we might see them in May. Oh, and by the way, the great Oz speaks again. Oh, I'm sorry, I'm joking. I mean, the Fed speaks again at the end of January, on the 30th. So we're all on pins and needles, kind of just awaiting our fate with the rates. And what does this all mean for home prices in 2024? Well, okay, I follow the weekly numbers pretty closely, and Altos Research was kind enough to publish some very clear charts. And as we all know, data doesn't lie. Now, first of all, for those folks who keep saying that home prices are going to crash, I'm just not seeing that so far in the data, right? Have a look at this chart. Now, it shows you that the median home prices and the median price for new listings is already higher this time than it was the same time last year, all right? Note the dotted lines where I circled the current prices versus this time in 2023. Heck, you can even see the growth all the way back to, all the way back from 2019. And additionally, have a look at this chart. We are up 5% over last year on houses going under contract, January over January. So all signs so far point to a real estate market kind of on target with steady price increases and incremental growth in inventory and a rise in home demand for the first half of the year. And as long as the rates stay conservatively in that, 5.5 up to 6.75 range, we should not see the market overheat, right? But stay to a relatively healthy simmer. But there's only one thing that's an open switch right now that could affect our current burgeoning spring market. Now, remember that one element I mentioned at the beginning of the video? Well, okay, that was a clue. The element is water, and specifically frozen and potentially lots of it. We had significant weather this past week. I mean, much of the country was buried under snow. We had school closings, delayed openings, generally just trying not to freeze our little fingers off. No doubt, weather postponed a lot of folks from listing their homes, as well as prevented buyers from coming out to look at properties. And given that it's an El Nino winter and we're looking at possibly wetter, colder conditions, right? If weather ends up forcing the spring market into a more condensed time block or later in the year, we're going to likely see more homes for sale and more buyer activity in a shorter period of time, which could stimulate the market into a concentrated jump in demand. Now, especially if the rates continue their gentle slide. Now, what does this mean for you? Regardless of all of this, there's one thing that's remained consistent, and that is the increase in home prices year over year. All right, and if you spend your time debating whether home ownership is actually a good investment, or if you're terrified that you'll buy a house at the wrong time, and if you're just unsure in general, okay, then you may not be ready to invest in your own home. But if you understand, and I mean truly understand that saying, the best time to plant a tree was 5 years ago. The second best time is today. Then you know what you have to do. It's time to take action before everyone else plants their trees around you. Listen, our goal at Nancy Chu Homes is to help everyday folks with valuable information that we think they can use as they navigate the world of real estate and generational wealth building for their families. Please like, comment, and subscribe so that we can reach as many people as possible with our message. And if you're ready to buy, sell, or invest in real estate, head on down to the description, find and fill out our form, and we'll get you the most talented real estate professionals we know all across the world. All right, see you guys next week.